Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. Okay, daily chart, and you can see they tested the 9-day last night. They've broken down below it. We had a nice little move to the downside late in the day. Let's go to the hourly chart. We've been in this consolidation. You had weekly support, weekly pivot support in 3 spots. It expanded yesterday into the close, made a lower high, expanded further in the Europe session. They're trying to bounce it a little bit here. So we've traded as low as 35.42 half. So that's expansion out of the compression. Now, now the bears face their arch nemesis called follow-through. Okay, the bears can always get that first move going. They've been able to do it for years, and we've taken advantage of a number of these moves. But then they run into their arch nemesis called follow-through. That means, can you put together a 2-day move down? Can you put together a 3-day move down? Can you put together more than a 20-minute move down? Can you follow through on anything at all? And the bid tends to be so tough in these tapes, the answer is typically no. So I'll be very interested to see how today plays out. I would not be surprised if we retested these highs. I think for certain we're going to engage this hourly mid-band today at some point. On the upper edge, you're talking about things like 35.79.92, so 35.80, call it daily pivot, and that 85 half weekly pivot. What do the bears want to do? They want to break this low. They want to close it somewhere down around here, and they want to get back to engaging this 35.12 area where they were last week. That was the pre-FOMC price from a couple weeks ago. That's where they want to live. What do the bulls want to do? They want to get back up in this range. They'll settle for that. They'll settle for a battle over 3,600 after giving up 60 handles to the downside. So it was a good day yesterday. It was a consolidation day that was pretty sloppy to begin with, and we had a few decent trades. We got into this 35, 97, 98, 96 inflection point in the afternoon. That finally decided that it wanted to be down, and we ended up short 94 half, which was good. We took 30 for the runner, so we didn't ride the move down to 42, and we're flat now. I'll be flat into the bell this morning. But the thing for us is we've really learned how, and we're really developing these interim stops where we rarely have much out in the wind in the way of risk at all anymore. So it's basically we're either taking advantage of these moves, or we're getting out even, or we're getting out for a couple of handles, and it stopped a lot of the re-entries that we've done for a lot of years in the room, and it's let us stay in trades that maybe we're down a tick on or a couple of ticks and come back in. So we're still messing with that, and we still have all the other things that we've been doing for years. So it's a very exciting time in the room right now, to be honest. As I look at this chart more, that hourly mid-band is going to have a lot to say today. It's already diving the meat price. I wouldn't be surprised if we traded on either side of it for a bit. As far as everything else goes, you got volume-weighted average price at 58 half. Madonna's at 52 and change. 5-minute mid, 53.75. So it's all kind of, it's all going to get kind of concentrated here. I'll be very interested to see. I'm doing this at about 5 after 7 in the morning. I'll be interested to see where we open, and I'll be interested to see how the bears react to the bulls' first real serious push to the upside. I'm expecting not all that whippy or choppy of an open, and I'm expecting a clear winner at the end of the day. And the bulls want to go right back to 3,600. They want to squeeze them right back there, and they'll leave them there going into Friday, and then try to make progress from there. The bears are going to have to hold that off. They don't want to get anywhere near there. They don't want to give up weekly pivot. They've got to hold weekly pivot. If they do, it ends up being a really nice short if it catches there, hangs around, and then fails. The ideal case for the bears is they don't even get back there. It can't get over the top of the hourly mid-band. You print a lower low, the bulls take their ball and go home, and we end up down around 35.12. So volatility is still here. It never went away. And even these consolidation zones have been pretty wide, definitely wide enough to get work done. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check out the room. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.